Both and the regulators also confirming these changes. What do we know?
Yeah, it largely aligns with Bloomberg's own reporting. We know that the regulators hauled in Ant executives on Monday, so the PBOC, the banking regulator, amongst others, and essentially dictated the terms of this restructuring to those executives. And there are going to be 5 key areas that Ant is going to have to address, including what the regulators describe as unfair competition in the payments part of the business. They're going to have to improve their corporate governance, manage their liquidity risks better. They're going to have to ramp up data protections. They're also going to have to cut the value of their massive money market fund, Overhaul. So as a result of all of this, the Ant Financial will now be put into a financial holding company, and it will be regulated and supervised much more like a bank. What this means for the company going forward is that growth is going to be constrained, significantly constrained, according to the experts that Bloomberg's spoken to. And of course, the question is, when will this company IPO, if at all? Eric Jing, the CEO, says and is committed to his staff that that will still happen, but it could well have been pushed back further because these measures that the regulators have imposed on the company are seen by many as being stronger than expected. So again, this company will now be supervised much more like a bank.
Speaking of the broader banking sector and the broader economy, Tom, we've got the recent data showing that Chinese banks extended a record amount of loans in the first quarter. Are we expecting to see more action from the PBOC on this?
Yeah, good question. So 1.2 trillion US dollars worth of loans, as you say, a record for the first quarter, and it really ramped up in March. 8% overall above 2020 levels when the PBOC and the authorities here were pumping liquidity into the system. Now, we do know from our own reporting that the PBOC has leaned on the banks here and said, look, you cannot extend more loans than you did in 2020. So there's clearly concern that the banks are pushing out these loans at a pretty fast clip. It does show, of course, that there is demand for that lending, and it does dovetail with the strength of the economy as things continue to rebound here and repair. And more broadly, though, it's worth pointing out that in terms of aggregate social financing, that actually came in below the forecasts. It was up on February, but below the forecasts. In terms of broad money supply, M2 money supply as well, that slowed pretty sharply. Shadow banking as well. So the view from Bloomberg Economics, in fact, is that you're probably going to see the PBOC ease off on some of these steps to withdraw liquidity from the system because you're still seeing overall credit is lower than it was back in 2020.